Why you should hold safe assets in your portfolio. You've probably heard this before, but Warren Buffett's number one rule of investing, which is almost cringe at this point because you've heard it so many times, is don't lose money. And his second rule is don't forget rule number one. So what does that even mean, and why should you listen to me in the first place? I was mentored by the Institute of Trading and Portfolio Management ex-Goldman Sachs traders Anton Creel and Edward Scheck, and the portfolio manager of Dragonstone Capital based out of Singapore, managing $3 billion. In addition to that, I have completed multiple specializations and have also created my own algorithm which is running in the markets, which has generated me over a 7,500% return over the last 15 years, all of which you can find in the bio. The markets go up, the markets go down. That's been happening since forever. And if you want one consistent source of income, then you need to invest in safe assets. And I'm talking about US bonds. I read The Intelligent Investor by Benjamin Graham, a book which Warren Buffett himself said he had a religious experience by reading that book. And in that book, Graham basically said that you should not be invested in stocks less than 25% of your portfolio or more than 75%. So as a max, you should have 75% of your portfolio in stocks and 25% in bonds. And at the very least, 25% in stocks and 75% in bonds at the very least. Not just Benjamin Graham, but even JP Morgan has a lot of documentation online of historical 60-40 portfolio return, which is like 60% equity and 40% bonds. So this just basically goes to show you how important it really is to have like a risk-free asset in your portfolio, yielding great returns over time. And because of that, you know that to an extent you are hedged and you can sleep better at night. Don't take my word for it. It's JP Morgan, Benjamin Graham, and Warren Buffett himself. You need to hold safe assets in your portfolio. Not even just bonds, but even a high yield savings account by American Express or anything else, 3.5%, 4.5% returns. That's great. Put some of your money in those, get a dividend on stocks, have some risk-free assets. You will be hedging out a lot of your risk, and your equity curve is going to be a lot smoother because of these risk-free these risk-free securities, which give you a very consistent dividend return over time. If you guys want a video on me breaking down the best risk-free asset or the best dividend investment you could make, tips, REITs, 10-year, 20-year, 2-year, treasury notes, bonds, which high-yield savings interest account you should open up, let me know in the comments below. And thanks for watching the video, guys.